Why did the stock market went down in the last days of the week? And which one should you buy? A Adidas share or a Nike share? Or
maybe another brand.
Or maybe another brand.
Armor.
Do you have also a question?
I don't have a question, but I had a lot of questions from clients about rare earth metals.
We are going. Yeah, you can have the raise the question. Should you buy them?
Should you buy them? Yeah.
Okay. So the last days of the week, the stock market went down, and why was that? Because that's a lot of questions. A lot of people are thinking about it,
Yeah.
and it's also funny to see the markets go down, and then people are looking for the reason.
Always find a reason. I always try to bend it in their favor. No, that's because of what this or that. They always try to find self-purposing purposes.
But why did the market went down?
Market went down due to the interest rates. Majority of things, I think the people were scared of the fact that interest rates are going up. And I zoomed out a little bit, and we're actually still not at levels of March last year, before COVID started. So they are going up, absolutely, but we're still low. Especially if you look in the Netherlands, for instance, we're still below zero for the 10-year. If
Government.
Government bonds.
Yeah.
If you look in the US, it's getting higher, but it also gives the Fed some space to intervene again, no?
Yeah.
So.
Yeah, that's what you saw. So there's a sell-off of those bonds, and automatically the interest rate, the real interest rate, goes up. But if it's for a short term, and governments need to give out extra loans, then it will be adjusted.
Correct. Yeah.
So shares went down, and especially the tech shares went down. And it's, on the other hand, that's not strange because they also went up the most.
Yeah, I mean, absolutely. If you saw the rise of the tech stocks this year, I mean, it's not normal. I mean, Tesla went up to 300%, and Microsoft, Amazon.
So what you said, inflation, the people are more afraid for inflation, but Powell, so the president of the Fed, said also he does not expect high inflation or inflation for a long period.
And that he's always ready to accommodate the market.
Yeah. So, but that was the main reason.
Yeah, what I do think was important is that just to say what happened there is that if you did see higher tops this week, and if we zoom out a little bit, different moments back in time, there is some similarities to be noticed. Specifically 2007, you saw a higher price of the index, and also then if you look at a specific indicator, in this case the MACD, you see that you have a higher top with a negative divergence. Basically that is an indication. You see that also in 2011, you saw that in 2015, 2019, at the top of December 2019, January 2020. Many times it has been so that the market afterwards went down. The thing is, you never know exactly when. In 2007 you had this situation, high top, negative divergence, but only the market went down in October. So it can take a year, it can also take 2 months, as we saw last year. So, but it's just something to follow. I think it's interesting to
can be a
point out. So this is a monthly chart. So you're looking really on a long period back in time. So it's another tool to hold on to if you want to make an estimation on where the market might be going to.
Yeah, tech stocks went down. We said Tesla went down. Also, a new player is coming into the market. They didn't deliver a car yet, Lucid Motors, and they say, and the chairman is he's coming from
Tesla.
From Tesla. He said, I'm not a competitor of Tesla. I'm more in the luxury segment, and if you look at it, Lucid cars, if you Google it, it's a really nice car from the outside. But I said that didn't sell any car, and they are thinking about an IPO, and based on those rumors, they are already valued at $24-25 billion. A lot of happening in that market.
A very capital intensive business. Imagine you have to build your fabric, and then you're not selling anything yet, so it's extremely difficult.
Yeah, but interesting. And we follow it all the time because there's a lot of happening in there. Okay, what's hot?
It's hot, rare earth metals. It's hot because there's a lot of the prices have been going up about 300% over the last couple of years. What is it? There's actually 17 rare earth metals. You will see them in your screen now. It's a lot of difficult names, neodymiums and dysprosium. There's a difference between the ones that are magnetic and the ones that are non-magnetic. So what is important is that there's an oversupply of the non-magnetic rare earth metals, the REEs as they also call them, and there is a scarcity on the ones that have magnetic power. It's used for any day-to-day purposes. If you think about smartphones, turbines for windmills, but also, of course, the electrical vehicles, the batteries. The price development, if you look at 2010, you can invest in this sector, this move. It's called an ETF, is called the REMX. It's the VanEck Rare Earth Metals Strategic Earth ETF. Went down almost 75% since 2010. You could bought them then at $325. Nowadays, they are quoted at 74.6. So a lot lower. Important, if you want to buy in this, be aware that the majority of production is done in China. There's not a lot of regulation, and it's also a lot of illegal activity going around with this specific sector. So a lot of child labor maybe, or long working hours, bad labor circumstances. So if you are really against that, then don't invest in this, because it's something that you should be aware of. But there's a lot of questions about it, if this is something that will be the next hype, already in this hype. So I think it's interesting to follow. Yes, 150,000 tons on a yearly basis been produced. Like I said, the majority in China. You can invest in it. If you want to buy the ETF, you need to be able to have the professional status, because you can't. It's a US listed ETF without a key information document, so you can't buy it directly on the market, but there is a possibility to buy it with a CFD, and then you basically lay down 35% of the underlying value. So I think you see the chart in your screen. Interesting move. A lot of questions about it. Was also an article this morning actually in the Spanish newspaper about it. Metales raros.
Oh, really?
Call it. Yeah.
Oh, interesting. I spoke last week about DoorDash, that they can be the new competitor of Amazon.
Yeah.
And I forgot to say, because you say article, there was in the Dutch newspaper, it's called the Parool, but it was an English version. It was about the delivery industry, and they quoted in there that it's nothing new, because already the Romans, so a long time ago, the delivery service was really huge, because at that time they cooked in open fires. And a lot of people were living in apartments, and they were not allowed to have open fires in apartments, so they all went in the street to buy the food and took it home. And then later in the 20th century, it was also really already upcoming in the beginning of the 20th century, and later in the 60s, it also exploded with the pizza delivery. So it's nothing new. Like the electric cars.
It's a really simple
100 years ago, almost all the cars were hybrids.
Yeah.
So nothing new. If you drive a hybrid, you're not a trendsetter. It's already 100 years.
Old-fashioned.
Adidas or Nike? What's your favorite brand?
Nike.
Why?
Feeling.
Yeah, that's a brand.
Yeah. Just feeling,
If you look at the sector, so if you look at the sports sector, the shoes, the clothes, the two big players are Adidas and Nike. Adidas, of course, coming from Germany, and Nike is coming from the US. And that sector also had a bad year in 2020 because of the stores that they were closed. They have some stores directly, but also indirectly. They did sell a lot online and also through the direct channels. So the market is looking how will that be developed in the future, because then they have higher margins, of course, because there is, the middleman is partly cut out. So they had a bad year, not as bad as the clothing industry that make suits. And a lot of people they did buy running shoes because they wanted to do some sports, and the other possibility was to run outside in the park. So they had not a good year, but not that bad as other ones. So if you look at the market share, Adidas has a market share worldwide around 11% and Nike around 50%. So Nike is a bigger company.
Yeah.
If you look at because I want to approach it from different angles. If you look at the future, if you look at the analysts, the consensus, then it's quite the same. So from that perspective, they are running up in eagerly. There's no front runner in this case. If you look, I don't look at 2020, but 21 and 22, then the price earnings is 35 versus 34 4.9 and 29 versus 2.9. So that's the how many times you pay the profit of a company. Is that high? In this sector, it's the average, and if you look at the price earnings before 2020, that was also on those levels, about around 30. So they are runner-ups. If you look at the net profit margin, in 2011, it was 4% for Adidas and around 6% for Nike, and then Nike climbed a lot, but they decreased in the last year. So now they are together around the 8%. So Adidas improved the net profit margin. If you go back and you look at the sector, so the who is buying those clothes and those shoes, it's the middle class. And if you look at the expectations of the middle class for the next 10 years, that's incredible. They say the middle class will explode. And that's good for the economy, because you must have a really big middle class in your society.
Absolutely.
But worldwide it will explode, especially in Asia. And of course they are quite brand
sensitive.
sensitive. So that's good for this sector. So for sure this sector will grow a lot. So if they keep their market shares, they will grow also. So that's really interesting to see. If you look at the younger population, and UBS did an interesting search, investigation under users of TikTok. So TikTok is a social media platform for especially the really young people. That Nike and Adidas were not the favorite brands. So, and for example, what I see you thinking, what were the favorite brands? I have to look at, because some of them I didn't know that they exist. That were companies like Pretty Little Thing, Fashion Nova, Shine, Game Shark, and they had all more likes than Adidas and Nike.
I don't know one of them. If that, I start realizing that I'm getting older, maybe, that I don't know these brands. I have no.
But Martin, you are getting older. That's true. Every
I don't
day
know
you are
one of
getting
them.
older. No, but I looked up the first one, the Pretty Little Thing, and that's clothing for girls. So it's not strange.
Well, I have a girl, so I could have maybe
ask her this evening if she knows her.
I'll ask her tonight. Yeah.
So the sector is growing, but they have to work on their brand awareness for the young people. So that is really interesting. So then I always like to look at the debt of a company, and then you see a difference. Then you see maybe the culture difference between the Germans and the Americans. Because if you look at the debt percentage-wise of Nike is much higher than of Adidas, but they have an extra some debt obligations. They took money out of the market because they said we can borrow for only 2%, and they use it of course for the production and the marketing. So they have a high leverage, and if it goes well, then it works in their favor. But if something will happen, then they will have a backlash.
Of course,
So
definitely.
they are, if you look at risk-wise, Adidas is probably less risk stock than Nike, and if you look at the estimations, then it's similar. So I think that's interesting to follow those brands. If you go back to investing, if you believe in that sector and you believe, especially in this chart I have in front of me, that the middle class will grow, then they are the market leaders in that sector, and then you can for yourself decide, okay, I buy them both, and I buy 70% of that share and 30% of that share, or the other way around. That's the positive thing about the stock market. You can buy them both. So I think that's quite interesting, and a lot of people are focusing on that sector, and then you can buy the two biggest players. It's Casual Friday today. You can see it. We are wearing a suit, and I'm even
at least until here.
Yeah, until there. But I have a sport shoes.
Yeah.
I'm wearing sport shoes, and I'm wearing or Adidas or Nike. What do you think? You can let me know. What do you think is my favorite brand? So that's hot for now. Next week I'm going to talk more about that. And what you see is if it's not going well with a company, then that is really an important thing. If it's high leveraged, and then in
Exactly,
multiplication,
the leverage is the problem.
the more problems. So if you think that there will be problems in the marketplace, maybe on your charts with companies, then I will show you how you can, in your portfolio, that you can make a little position with debt-free or hardly debt-free stocks. I'm going to talk about that, but it's me, and it's next week. What's coming up in the market?
Next week I look at the calendar. Monday we have the German manufacturing figures. They expect them to be a little bit better for February. They were 57.1 in January. They expect 60.6, so that's good. It's also an important indicator for the rest of Europe. On Tuesday we've got the retail sales, which was minus 10% in January. They expect it to be better now at -1. But that, of course, is an indication on what our consumers are spending.
Yeah.
Also, we have the unemployment in Germany, which is also a little bit an indication for Europe. European Consumer Price Index, they expect it to stay at the same level, more or less. Thursday is important. We have the beautiful word we always like, jobless claims. So the amount of people that are applying for a
beautiful figure. The figure itself.
Yeah, the figure itself. So there was 857,000 people applying for a jobless claim last week, and they expect it to be more or less similar. And then on Friday, in line with that, is the unemployment in the US. They expect it to be stable at 6.3%. So those are the things that we are looking out for.
Interesting. Thank you for watching, and hope to see you next week.